I like to give everybody a tip for making $1 million in 30 days. Right. So this is the strategy. It's probably closer to 90 days now with how slow the banks are.
It's one hell of a tip. Let's
right?
hear it.
It's a $1 million tip, right? If you don't understand this, then you're missing $1 million in your life, right?
All right. Thanks for joining us. Freddie Rappina with Opt Financial. And this is our Chess versus Checkers podcast. And we have a special guest today, Gualter from Alchemist Nation, whom I've heard of in the community here in Tampa plenty of times, but this is actually the first time we've met in person, which I'm excited about. Our normal disclaimer, this is not specific investment advice. So if you're looking for that, please reach out to our firm and one of our advisors will help you. But Gualter, thanks for coming out, man. This is great.
Thanks, Freddie. It's good to be here, man.
Yeah. So tell me about Alchemist Nation. Tell me how you got started. Tell me about where you are. What's going on right now?
Wow, that's a lot of questions.
Yeah, that's a lot.
So
Alchemist Nation. Right at you.
Yeah, I'll just take that. We're playing chess. Is that chess?
Yeah, that's chess, man. Yeah,
I was like checkers. You just like jumped all my pieces. So Alchemist Nation was essentially created because at some point in 2015, I went through a really epic crash. I lost a lot of real estate. I lost a lot of money, and I started buying real estate. So it's interesting because I went through a divorce. And in that divorce, I almost lost my houses. I only had 2, but it was a lot to me. And then I went through this kind of mindset challenge, bought a whole bunch of stuff, and became a multimillionaire. Well, I was financially free at 30, millionaire by 32, multimillionaire by 34. Mm-hmm. And at 34, I started saying I had to do something different in my life because I was really bored. Like I was not really suicidal, but I was super like depressed. I had a lot of money, I had a lot of friends. I could drink for free every night, and no matter where I went in my little town in Fall River, Massachusetts. But I was sad. Like I was just like, I don't know what the point of my life is. I beat the game. I had all the girls, I had all the money and all the power and the fame in that city. And it wasn't until I just kind of sat down with myself and I said, man, like I got to do something different with my life. And I've been the last 3 years focused on building millionaires, on like helping others become wealthy, but then not just to have wealth, but so they can understand the next step, like what's beyond wealth. Like how do you get back your freedom of self, like figuring out who you are.
How do you be happy?
How do you be happy? Yeah. Yes. Because I was one of those people who growing up, they were like, hey man, like just be yourself. I was like, I don't know who I am. I'll adapt to anything because, whoever I'm around, I'll adapt to. And I was just like kind of just a super nice guy up until I was about 28 and went through that divorce. And then I had to become this complete opposite, just monster. And at 34, 35, I just realized I don't want to be the monster anymore. Mm-hmm. And I got to somehow bring these two together, this super nice guy and the super aggressive businessman, and like kind of merge. It's kind of like the Hulk, where you just like Banner and the Hulk just had to have a conversation,
So you're like Professor Hulk now, like in Avengers, where you got
to
like
wear
the
glasses, but still have the green muscles.
Okay.
Right?
The best of both worlds. Got it. Yeah. That's great, man. So let's talk about debt.
So real estate obviously is built on debt. Business is built on debt. And in fact, a human's life, if you want to live a good life, is built on debt as well. It's not all about paying debt down, but The Richest Man in Babylon is a book that says debt is your enemy, right? Mm-hmm. They're like, you got to pay your debts, pay thy debts, they're your enemy. What I've found is that this whole economy is built on debt. If you don't owe somebody something, you probably will be kind of just a not a useful person in society. But if you owe a few people a few things, you'll go out and work and you'll do things, right? An example of why debt works is because when you borrow, let's say $1 million, and you go buy a $5 million building, versus you don't borrow anything, you just have we'll call it, you saved up $10,000, which is the average savings, right? For somebody who's in their 30s, 40s, right? Average savings, 10 grand. So let's say they save up their 10 and they drop that into a stock, and that stock goes up 10% for the next 100 years, right? We'll just talk about a 10-year range. If it goes up 10% for 10 years, you've now got 100%. We're not going to talk about compound interest, the eighth wonder of the world, because other financial planners will make that sound beautiful.
Yeah. Well, stop right. Let me jump in there because I love differentiating myself from other financial advisors. Right. Okay. So compound interest is irrefutable. It's math, right? Okay. Yes. So I'm not here to say compound interest is wrong. Right. I'm going to say on the air that it's oversold.
Yes.
Especially to the middle class.
Correct.
The reason, in my opinion, is because people just don't live long enough. Right? If you lived 900 years like Yoda did, compound interest would be great. By like your 400th year, you're rolling in dough, right? But having investing $10,000 with our firm and getting a 10% return, I mean, compound, it's like this is like money grass growing. It's not like it's going to be very, very difficult to be able to accumulate enough wealth to be able to enjoy your lifestyle. And that's like what we're really, really passionate about, having their lifestyle improve. Okay.
Right.
So, but continue on with that. But yeah.
So going with the example, let's say, we're just doing a simple example of $10,000. That's all you had. Both people only had $10,000. One went and borrowed $1 million from investors. They raised capital. They took the $10,000 and they got on planes and bought lunches for investors, right? And those investors invested $1 million with them. Mm-hmm. And then they took that money and they went and they rolled it into buying a $5 million asset. The $5 million asset, it's real estate, goes up 5% per year. $5 million going up 5% per year for 10 years is a very big difference from $10,000 going up 10% per year for 10 years. Right? The ultimate ending result is you're talking about $250,000 made per year for 10 years. That's $2.5 million.
Yeah, because
when big difference.
So when you buy real estate, I think what people don't really understand is that appreciation and the real estate, you get 100% of that appreciation. Right. The bank doesn't get any of that, right, or however you financed it. You're going to get the appreciation. You're partners with the bank in this, or with the lender, or whatever, however you're financing it, in the scenario where, they're getting their interest, but you're getting a lot of that income that's coming in from the property. Correct. It's going towards the debt, right, towards the principal, and the appreciation you're getting 100% of. Correct. They're just getting their interest.
Well, now we're talking about internal rate of return. Now you're talking about
I'm a nerd.
Right. You're talking about amortizing the loan. You're talking about depreciation of the asset, which means government doesn't allow you to pay taxes on that. And you're talking about actually rent, like cash flow. So now, if that same 5% asset, the average, we'll call it syndicator, who's doing a large multifamily deals like this, they're going to pay out a 20 to 30% internal rate of return, IRR, per year. So let's call it 25, or we'll call it 20%. We'll go on the low end of this. That IRR over 5 years is 100% return. Then over 10 years, you're talking about another 100% return. And again, we'll just dissuade, we'll put compound interest aside. We won't talk about it or bring it into here. So you're talking about that person who made 2.5 probably made closer to 10 million. There's a very good chance that over that $5 million asset, if held for 10 years, if the syndicator and everybody held it for 10 years, became a $10 million asset. And that, you start looking at it, it's like, man, like there's nothing like this. Why aren't people talking about it?
Well, why aren't financial advisors helping their clients get into real estate and businesses? That's I guess that question every day to myself.
Well, that's why I asked you before we jumped on the call. I was like, what kind of financial advisor you are? Are you a fiduciary, or are you somebody who sells infinite banking systems, right?
I'm a fiduciary.
You're a fiduciary. So once I realized that, I was like, okay, it'll be a different conversation because you're more about you're like me. I build millionaires. That's my statement. I tell everybody I build millionaires. So you as a fiduciary, your job is to make their wealth grow. Right? Yeah. So in a way, like you can't legally go out and say I build millionaires because you're not a coach. I can do that.
Yeah, exactly. I can't be promissory with my statements. But helping people grow wealth, whatever that is to them, it is to them, right? And but we love working with chess players, people that want to build wealth. The different ways that we're going to do it, they're just tools, right? All financial products. I don't care what it is, or strategy, the tools. Like no one's going to be wealthy if they just do this or just do that.
Don't try to hit the screw with a hammer.
Yeah, exactly, right?
That's what a lot of other people do is they just like, okay, like I got a hammer, let's go hit this screw.
Everything looks like a nail when you're a hammer,
Everything looks like a nail, yeah.
But that doesn't mean the hammer's the bad tool. Right. It means the person holding it, if all they can do to make money for themselves is hit nails, correct, everything's going to be a nail, right? But if we're trying to fix a kid's bike, we're going to need a wrench for that, right? We're not going to need a hammer. Right. So, so it's understanding how these tools are going to work, but it's a symphony. It's an orchestra of different tools working together to be able to create the leverage, and that's the big piece, right? Leverage. The leverage to be able to get the financing. I feel like my job is to make people look really good to lenders, right? To people that have other people's money, exactly, to be able to borrow and then purchase the cash flowing asset, whatever that may be. Typically, it's going to be a real estate or business, right? Right. But it's not just, hey, give me money and let's watch the grass grow for 30 years.
Because it doesn't work. We've looked at that model, right? You've seen it. The guys selling annuities and mutual funds, it just doesn't work.
Well,
right?
it's not that the annuities or mutual funds don't work. It's just
it's a hammer. They're just a hammer.
It's just those things in and of themselves are not going to get you to the promised land.
Right.
But, if you have a whole bunch of paper assets and you go up to a lender and you say, hey, can you give me a loan because I have all this stuff?
Right.
The lender's likely going to give it to you, right? So it's not those things are bad. It's who's, everybody, in my opinion, everybody should be working with a fiduciary. That's not the end, right? So I don't want people just going into mutual funds or ETFs or whatever. I want them to do that and then do what the investment company is doing with the money. And a lot of that times it's investing in real estate.
There's only one way to build wealth. There's actually 4 vehicles. It should be 3 vehicles. And 2 are leverageable. One is super leverageable. And the other one is it's dollar for dollar, right?
Mm-hmm.
So the first being real estate, super leverageable. We call it names on deeds. You put your name on enough deeds, you can get rich. The second one is stocks. We'll call the second one business. Business is great for cash flow. Man, it generates a ton of money, but it's volatile. It can go up, it can go down. One hire is gone. That person ran your whole company disappears. Or the market shifts and it's gone. And then you have stocks. Stocks have proven, those are still companies, but they've proven the ability to sustain themselves long enough to get to public shares, public market. And that is a slower option, and that tends to be less leverageable. You can't leverage to get into it, but you can leverage it to get into other assets.
Right, you leverage it to get into other assets.
Correct.
Right.
So if you look at the structure, you look at business allows you cash flow. So business that's bringing money in, that's great to throw into an asset like the stocks, like paper assets, because then that can be leveraged into something like real estate. And
now you're talking my language right here.
If you go into a different direction, like, okay, you're not working a job, or you don't have a great business, you have no excess cash flow, you can't invest in stocks. It's not an option. You could theoretically invest in real estate with no money down, but those are the people who usually, get their asses handed to them.
Yeah, they really do.
They have no assets.
Who it really helps is the YouTube people with the clicks, but at the it's really difficult.
Buy a house with no money down.
You have no money.
But
it's like you have no money though.
Every successful investor,
I'm sure somebody out there has done it though. Yeah,
they have operating companies no matter what. They end up flipping real estate.
Yeah,
like they still will end up with a job. They'll still end up with a business because flipping real estate is not the same as investing in real estate.
Not at all.
So they still eventually have to sell an asset to pay the bills.
Yeah.
So they end up in a flipping business. So anybody who's like, oh, I did it solely through real estate. Yes, but your operating company became a flipping company.
Right.
So yes, you were in the asset class, but you were doing this. Could have been a real estate.
You're working in real estate, not having real estate work for you.
Could have been a contractor. Yes, you had a job.
Yeah.
Now, every major investor has an operating company. They all have something. They're plumbers, they're electricians, they're fiduciaries, whatever they are. They have an operating company, then they invest. The strategy that like America's not taught is build your business, take your money, put it into stocks, leverage it back, put it into real estate, and then from there, borrow against the real estate. The whole thing becomes tax-free if you can get it away from your business.
Right. So, or at least tax minimal.
Tax minimal.
Because
you're going to live on anything you take, you're going to pay except for the loans. When you borrow the loans,
right? When you borrow money,
you're not paying taxes.
You're not paying taxes.
I haven't paid taxes in 5 years, but I've filed tax every year. I file the documents. I just don't pay taxes.
It's good. Yeah. And that's, of course, that's like next level stuff, right? So you talk about the billionaires and then or why they don't pay taxes. Well, they just take out loans against their
I have no taxable
stocks.
events.
Yeah. So
yes, there's no taxable events.
Right. No taxable events. Not creating many taxable events is key.
Right.
And
if you can minimize them early in life, you can get the nut a little bigger. And the snowball gets big.
I feel like that's a big component of people investing in the market is because eventually we have to sell the assets in the market to be able to have income. And that's going to be a taxable event most likely, right? So it's how do we use these assets but not pay taxes, and that's where the debt comes in, right? That's where is it really? This is a question I ask. It's it's borderline rhetorical, but is it really debt when you can pay it off at any point in time?
Exactly.
It's
simply extra leverage.
It's just leverage at that point, right?
It's a hedged debt, right? It's like when you're doing stock options and you're doing a call and a put at the same time. You're just hedging your bets, right? The maximum you could lose is whatever those things cost, as long as you close them out at the same time. But the maximum you could reward is if it goes in one of those directions, you're going to be able to have a huge gain because you purchased the option to either put or to sell, to call. So it's people don't do that in life, and they should. I was told the other day that this person was in super debt. I was like, well, here's your strategy. Start saving.
Yeah.
Right?
Here's a great strategy.
Yeah.
And stop spending money.
Stop the bleeding.
Stop
right?
the bleeding, right?
But they were like, I got to stop the bleeding and start paying off all my debt. And I was like, no, stop the bleeding and start saving. If you stop the bleeding, put your debt on minimum payments and start saving, you're going to start feeling better. The bank will look at you differently. And then you can put a savings plan in place. Like the savings plan in place has to exist, but you need a savings and a pay down plan.
Right. And it goes to my point of checkers and chess.
Yes.
You may not be able to start with chess.
Right.
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 You may have to play checkers for a little while.
You may have to play checkers a little bit.
We'll play checkers for a little while.
Snowball, debt snowball, Dave Ramsey it, pay things down a little, like gazelle intense, you don't always be a lion.
At some point, we gotta. If you want to build that bridge over the chess, we have to talk about how we are going to leverage assets that you already have.
So when we first started Alchemist Nation, we taught classes, right? We teach names on deeds, get the money, get the deal, be the bank, like all these different strategies to be an investor. And everything was like for clickbait, like how can I get you in? And so whenever we did get the money, or like how to buy a house with no money down, we got these just tons of people, 18 years old, 19 years old, 20 years old, and they'd come in and say, okay, like I'm ready, let's go. And we're like, oh man, the banks won't lend to me. No kidding. You need a partner who has built time. Like you need to go and get a partner who's maybe 29, like 30, 40, somebody who's kind of established themselves, and you can still leverage up, but just understand like you're doing all the work because they're bringing their credit. Like,
Right.
they've taken the time to mature and build. And if you mess that up, they will never do business with you again. And now you got a black spot on yourself in this business. So it makes a lot of sense for you to learn that process now while you're 18, 20, like paying off debt, making sure you have to have credit cards. Like nobody talks about that either. Your credit score is super important as an investor.
Oh yeah.
Right? We're constantly, like me and my business partner, we'll fluctuate our credit scores like a little bit. But for the most part, we understand having money in the bank is key to getting the next loan, and having our credit look tight, just looking sweet, so that the lenders will always take a look at us. Because we're not doing little loans anymore. We're doing $5 million loans, $10 million
Yeah,
loans.
doing big stuff now.
And if somebody says no on that, it's like, dude, who else is going to finance this?
Right.
You need everything to look good. And having money in the bank, like cash is a position. This is one of the things I've been talking about lately is cash is a position. People don't understand that. They get a big windfall. They take a $500,000 or they get a $250,000 from the sale of a house, or they make $1 million, $2 million from the sale of a business. And they're like, what do I do with it? I need to invest it right away. And it's like, if you've already paid the taxes on that, which one, you've already messed up. You didn't set up a plan in place to defer the taxes. You've already made a mistake, and that's fine. But now we can't try to catch up on the mistake with another mistake of jumping into an asset. Cash is a position, and it can sit, like we were talking about earlier, like it can sit in a I don't know if I can say infinite banking system, but I know you have like different names for it with your company, but it can sit in a place where it's earning 6% or 5% or whatever that product is earning while you're waiting to invest. Then you can borrow against it and invest. If you've made that mistake. Now for me, I don't make that mistake. I usually just roll my money from one asset to the next asset with deferred sales trust, or a DST. I'll do a 1031 exchange into a Delaware statutory trust, like my girlfriend's doing right now, a DST into an oil company. The irony is we're real estate investors. She sold a house, made a $300,000 gain, and she's rolling that into an oil asset that pays 12% interest.
Yeah, another show we're going to talk about oil and gas investments, because I love that. I love direct participation programs. It's again, these are things the government wants you to do. Yeah. That's why they're giving you the tax break. But let's go back to that phrase. I, as a fiduciary advisor, can't say. I can say high early cash value life insurance. But I feel like that comes and goes in this, like especially in the real estate space, a lot. Yep. And so I just want to preface this conversation by saying that if a financial advisor, I always recommend people use a fiduciary financial advisor for everything. But if you are choosing to use just an insurance person, good luck. But if that person is excited to do your infinite, I almost said it, do your high early cash value life insurance contract, if they're excited for it, you're likely about to get hosed.
Right.
Right.
If that's all they sell, if that's their hammer, you might be in trouble.
Yeah, you're very likely going to be in trouble, because to do that correctly,
right?
Believe it or not, I can't make a whole lot of money on it. And if to do it correctly, now to sell you just regular life insurance, which will be a higher commission, Yeah, but when people are disingenuously selling that as high early cash value life insurance, or
IBS.
yeah,
Which sounds like a condition.
it does sound like a condition. Then for that to work,
Yep.
the commissions can't be very high, right? But it doesn't mean that we won't do it. It just means that people got to understand who really know who they're doing business with, and you actually have to have money. That's not something you can save your way into.
No,
that's not a strategy that you can save your way into. That's
again,
a windfall. Inheritance would be ideal.
Inheritance, capital gain.
Yeah.
So, a big sale.
Yeah. And people got to know the pros and cons of it, because there are pros and cons of it.
Right.
But anything for Alchemist Nation that's coming up, anything that you want to put out there, feel free.
Yeah, we got our 100 Millionaire Summit coming up. This is something we do every year.
I will be there.
I know you will. So we put 100 people, 100 millionaires in the room, and then we bring everybody else. So in this particular room, you'll have the highest concentration of millionaires than any other time in your life. So we're probably going to put 400 people in. We put 200 last year, 50 millionaires. So the ratio ends up being 25% of the room is millionaires. And one of the reasons we do this is everybody I've trained and built into millionaires over the years has made the one promise of I will train others. I will commit to answer questions. I will be generous. I will be nice and answer things. So we bring them together to the room. We teach over 3 days. I bring in my mentor. He's a billionaire. He shares how syndication, large multifamilies work, and all the other speakers are coming in to teach what's working right now, how we're selling our assets, what tax strategies we're moving them into, how we're building our networks. Because rich people have networks. That's what separates the rich from the poor. You want to really make a lot of money? All it takes is one relationship. You're one relationship away. And we know that. So at the 100 Millionaire Summit, you can go to 100mm Summit or Google 100 Millionaire Summit. Just go to Alchemist Nation. You can get your tickets, show up, be there. Or you can go to I Build Millionaires and show up every Saturday for free. And every Saturday at 10 a.m., I teach one of the 52 wealth principles. Last week was how you do anything is how you do everything. So it was like how to look at little micro things, like why didn't you get that loan for $10 from your father and you're going to go try to get $100,000 from a stranger? Like, why don't we go back and fix like why your family won't lend to you before we go after bringing in investors? There's just multiple layers. So every week we teach one of the principles, and it's I have my billionaire mentor on Thursdays review them with me. And on Saturday, I come and say, "Hey, like this is what I got from a billionaire. This is how he looked at that principle."
So you're bringing in the rookies, mixing them in with the veterans.
Yeah.
So you can get more veterans.
So the idea is surround yourself with millionaires, serve millionaires. So like guys who are fiduciaries, realtors, mortgage brokers, we say serve millionaires. Surround yourself with millionaires, serve millionaires, and then build millionaires. Once you have become successful, like you should go out and teach others and pay it forward, because you need fulfillment later on in life. That's why you're doing this. You're an officer, and then you became a fiduciary so that you could help others. And like that helping others never leaves a person. No matter how much money you're making, you still want to contribute.
You just want to help more people. It's like it gives you license or the resources to help even more people than you could before.
And then you want to scale. And it's like, okay, I helped 10 this year, but now I helped 20. So the last 3 years, we built 24 millionaires. So that's our focus now. It's like, let's get to 100 millionaires. And then for me, I get to retire out of this particular position and I shift into my next business. And we just keep scaling up and allowing other leaders to take over Alchemist Nation and keep growing it. So it's an endless game, infinite game of just help more. And I think I've done a very good job at inspiring the right people and identifying the right leaders. And that's why it keeps growing the way it does.
Yeah. I enjoyed speaking at one of the Mint meetings recently. So it's a good time. And it's a lot of fun. You get to hang out too, which is fun too.
I like to give everybody, before I jump off, I like to give everybody a tip for making $1 million in 30 days. Right. So this is the strategy. It's probably closer to 90 days now with how slow the banks are.
That's one hell of a tip. Let's hear it.
It's a $1 million tip, right? If you don't understand this, then you're missing $1 million in your life, right? So you buy a $5 million piece of real estate, and people will ask like, how? Well, Google it, right? You buy a $5 million piece of real estate for $4 million. There's equity of $1 million in there. And when people say, oh, you can't do that. Well, in 2019, I bought a $2.4 million piece of real estate for $800,000. And I used none of my own money. I borrowed the $800,000 from friends and family. Actually, they weren't friends. They weren't family. I spoke at an event. So network. It was large network. So for $800,000, I then acquired an asset worth $2.4 million. And it cost me $100,000 to close. So, $900,000 borrowed. and I bought a $2.4 million asset. I made $1.5 million that year paying no taxes, just in equity. I did a cash out refinance. I sold one of the, it was 24 condos I bought. I sold one of the condos for $100,000. So I had that $100,000 I put into, I got it right back, after I'd done the closing. And it took me 60 days to do it. From the point of the deal was presented to me at a live networking event. And then I went and I raised capital at the next live networking event. And I did that over 2 live networking events. I raised $300,000 and the rest came from hard money. And that was how I did a $1.5 million income deal that I didn't pay taxes on because I didn't take the income. I just increased my equity. And so when I say like it can be done if you do a 5 out of 4, I did a 2.4 for 8. So like these deals do exist, but you've got to be in the market. You got to be super networked. You just have to have enough people. I didn't hunt for the deal. I just added value to a community and I asked, this is what I'm looking for. Who has something? And somebody showed up and said it. I did this for a while before somebody finally showed me something, right? And I added value to this community for a long time before those deals showed up.
Gotcha. Getting the cutoff sign from, from the guys here. We could do this all day, so with me. But no, really great having you. And this is one hell of a talk. And looking forward to seeing you out there. See you in Orlando.
Hell yeah. Yep, we'll be there.
Sounds
Cheers.
Good.